Aren't you interested in learning breakthrough wealth building strategies, such as how to flip a home in less than 2 weeks using other people's money with no real estate license, or how to build a low-cost home-based business? You can discover how to take passive income from any source and invest it into real estate, stocks, or business to become financially independent investing in any market with Residual Roads Business Institute. Collaborate with Andre and other Residual Roads advisors to create a free action plan and start implementing strategies today. Go to www.residualroads.com or email info@residualroads.com. Welcome to the Investing Uncensored podcast. You've been searching for different ways to become financially independent or generate passive income to live out your life's purpose as you've seen others do it, but need insight on how. Well, get excited because here you'll discover the tips and resources to fulfill that need. Andre Stewart has spent more than a decade successfully making it happen for himself and others. This is the Investing Uncensored podcast. And now here's your host, Andre Stewart.
Welcome to another episode of Investing Uncensored. I'm your host, Andre Stewart. And today we're going to talk to someone that calls themselves the passive income specialist. I'm looking forward to talking to him because we all need some passive income. And I think they said that you need 7 income streams. So maybe Justin can help give us some. Justin Sloan, how you doing today, man?
I'm good, man. Good to talk to you.
Good talking with you as well. Justin is the CEO of a private equity firm called Sloan Capital. Justin, can you give us a little bit about your background and how you got started into private equity in the real estate space?
Yeah. So serial entrepreneur since I was 13 or 14 years old. Started, running around fixing friends' computers or delivering papers or whatever I can to make a few extra dollars. And then in high school, kind of fell in love with selling things. I worked at Radio Shack and that transferred into getting pretty good at selling cell phones. And I built a pretty large chain of cell phone stores right out of high school. And through that was able to learn, leasing and negotiations and all that kind of stuff. And eventually made the switch to real estate and, starting to buy some rental properties and starting to buy some houses and strip malls and absolute triple nets and all that kind of good stuff, and continuing just to expand my knowledge. And as you said, try and find different income sources to make sure we're invested and diversified. And now here we are, 20 years after the start of all that. Feels like it's overnight, but it's definitely not.
I know you retired at the age of the fresh young age of 32. What did you do to get you to the point of retirement? I know you did the cell phone retail stores, but was it anything else that you did? Because I'm pretty sure a lot of people out here want to be able to retire that young. So what was it that you did to retire at 32?
Yeah, so the key was to replace my income. I had built a pretty big chain of cell phone retail stores, as I said, but the company that I was selling made some really big business mistakes and actually started to, within a period of a year, they lost about 30 to 40% of their customers. They were shutting down stores, downsizing. And so the writing was kind of on the wall about 5 years prior that I was going to need to find other ways to invest money. And prior to this, I was all in on cell phones. So as we went through and started deciding how to get out of cell phones, one of the things that I learned about was real estate and, what passive investing looks like and what a property manager is and what kind of systems we would need to put into place to add properties to our portfolio without necessarily adding time to our calendars. Mm-hmm. And it became kind of a game where, it's a little rental house here and another month or two later, you get another one over here. And then all of a sudden this, and, just keep stacking those and learning the process. But then, turning that process over to someone else that allowed us to continue on the other businesses as well.
That's pretty good, man. That's good advice that I think, some people don't know. But another thing I wanted to ask you about that, I know you were able to do this at 20 years old. Where did you get the funds? Were you given some money from an investor or a family member? Or how'd that go?
I wish. No, I come from old school. I'm, single mom, 3 brothers. We had no choice but to work. So when I started my first cell phone business, for 2 years prior to that, I worked at a corporate cell phone store. I ended up running some of their stores and, growing through that company. And I did the old school thing called live under your means. I made X amount of dollars. And as weird as it sounds, I spent less than that many dollars. And I saved. And until I had enough money where I could buy a couple cabinets and some inventory and a little bit of construction, and all that stuff. And it did. It took me over a year to save up enough money. And even when I started my first store, I didn't even have any money for employees. I was the only employee for 4 months, open to close, 7 days a week. Every phone that was sold was me, every payment, every customer service, everything. And that's how to build a business, get in there and understand every little piece of it. And then I could hire someone. And then we could hire another person. And then we could open another location. We could slowly do it that way. But it was definitely it was a grind the first many years.
And it's funny because, you know what? Everyone thinks that people get rich and they got money from their family members, or they got someone, or everyone that has money came from a trust fund. And I grew up very similar to you. You know what I mean? I grew up in poverty. I grew up on food stamps, the whole thing. And I think that hearing this from you, and I had a VC come on the other day, and he went through, a similar background that we did. No one gave us $1 million to start our businesses, but it's just this huge misconception, especially in the US, where people that are successful get villainized for working hard and making a lot of money. And for you just gave your example of having that one store and doing every single thing. When you start a business, you have to be the operations manager, you got to be the funder, you got to be the customer service person, you have to do it all. And I think people don't understand that part. And for you, even retiring at 32, you started at 20. So it was still a 12-year run that you had to get to. And then you add 20 years on top of that, like you said, to where you get to where you are right now. It's not like an overnight thing that I think people think it is. And it's just a slow grind, like you said, but it's just, for one, staying consistent and doing like you, just making a sacrifice to live under your means, which just seems like people have a hard time with.
Yeah, I mean, it's a game, right? Investing is a game. And one of the cheat codes to that game is to get money to work early. And, if you're 50 or 55 and, just starting to put money into retirement, it's a different game than if you're 20 or 25 and you make the decision to put money to work early. And I'm forever grateful to my younger self for being smart enough to make those decisions.
It's like like I said, the guy was saying that other people are out partying and drinking and doing all those things in their 20s, and you were doing exactly what you're doing, at 20, having your own retail store. And I did the same thing. I did things like Herbalife, just different things, and trying to try different business avenues to see what works, and then eventually you find something that works. So my next question is, since you have a private equity firm, what are the main components you look for when you choose your real estate deals or any type of company you choose to invest in?
Yeah, so we specialize in a couple different things. Real estate is definitely the biggest part of our portfolio. And then we do a mixture of kind of different companies or debt funds. Again, a lot of different things that give us diversification. And then the big thing that we're doing right now is Everbowl, and we'll talk about that, I'm sure. But as we started to scale, again, it was really mom and pop-ish, and it was running over and repainting little houses and doing this and all that and learning the process. And then as we've gotten into bigger deals, now it's a matter of finding properties that we know, or that the people that we know have a direct way to add value to those properties. So over the last year, we have not been big buyers of real estate, as the real estate has gone up because rents have gone up astronomically and interest rates have been so low, which caused cap rates to be so low. But essentially, in order to sell any real estate that's been purchased in the last 6 months, you need interest rates to go back to 3% and you need rents to keep going up. So we really specifically in the real estate sector are looking for properties that we know we can add value to. So properties that anybody can live in, and maybe they need some updates, or a strip mall that needs some redoing or needs some love or investment into it that can help those businesses be more successful. And our core investing strategy is just providing housing and locations for people and businesses to be able to affordably, stay there and stay in business. We don't chase this top, A-level stuff. We, any day, all day, mom and pop can afford it. Franchises can afford it, corporations can afford it. And when we provide safe, fair places for people to do business and live in, then we don't have any problems with occupancy and continuing to grow.
That was my question. I was going to ask you, do you guys have a minimum amount for like single family homes, or you look for portfolios? But you just said you kind of do all of the above.
We really don't do that much in the housing anymore. Over this last year, we've sold the vast majority of the houses. Again, I mean, if you look at how much they went up, it became one of those. I mean, I know everyone and their brother was buying real estate and going all in over the last few years, especially the last year. But I come from a phase when everyone run towards something, you run away from it.
Exactly.
And I didn't like what people were paying for stuff. I didn't like what they were renting it for. I didn't believe that they were setting up their tenants and all these people for success. And I think it's proving that my thesis is correct.
Yeah. I mean, I did the same thing. I sold everything. And so now, like you're saying, we're coming up in we're coming up in that phase of where we know that in the next 6 to 12 months or 18 months, we're going to have something similar with these prices. The prices are already correcting. So we're gearing up and, stacking our cash pile to be able to buy properties at they might not go back down to where they were, in 2019, but they're going to go lower than where they are right now because they're overvalued for sure.
Absolutely.
So then, talking about this, what's your outlook on the real estate market, I would say, in the next 24 months?
So who knows, right? I mean, the Feds could drop interest rates tomorrow by multiple percent and all of a sudden we're back off to the races, or they could, we could get to 10, 11, 12% interest rates and it could crash. I'm not smart enough to be able to predict what anyone's going to do. Right. But I am smart enough to be able to always be taking advantage of different situations that are happening in the markets. So, in one of my businesses, the one that I'm really focusing on growing right now, it's called Everbowl. So it's a franchise. It's an acai bowl concept. And it's kind of like Chipotle, but fruit. So customers can come in and they pick a number of different toppings and essentially create a bowl of stuff that's been around forever. And we've been opening one of these every 30 to 45 days. I bought the rights to the company for the state of Texas, and we've been launching them like crazy. So while everyone else has been paying this crazy rent and paying all these things, as now we're starting to see vacancy and we're starting to see people go out of business and we're starting to see landlords hurt a little bit, my acai bowl concept can actually go in and take advantage of this business climate, right? We're able now to get landlords to give us better leases, more TI, more runway, less cost, etc. But 6 months ago or a year ago, everybody was trying to open a business because there was so much free money everywhere. And now that's dried up.
Correct.
So for me, it's important that we are always positioned to be able to take advantage of different scenarios. And if I keep seeing real estate go down, we might get back to the point of putting heavy dollars back into real estate. But right now, we're opening debt-free restaurants. Our investors, we use investor-backed dollars to open these restaurants. They're debt-free. We're getting leases 20, 30, 40% what we would have a year ago. And we're signing 5 and 10-year leases. So we get to save this money for a decade to come and take advantage of that part of the business climate. There's many different things that you can do or invest in. Again, when everyone's running away from stuff and everyone's closing down their restaurants, we're going to go open a bunch of them. That's what we did during COVID. And then we paused and then now we're doing it again. Like when everybody stops, that's when I like to go take advantage of those things.
Like Warren Buffett says, when people are fearful, be greedy, and the exact opposite.
Have you ever thought to yourself, I wish I could get into real estate investing? You can change this as quickly or as slowly as you want to now. Imagine yourself networking and making new connections in real estate globally, or buying an investment property in a market or country that fits your needs. People do. They know what I'm talking about, and now you can too with InvestFar. Connect and join the network. Remote investing made safe and easy.
So then, I live in Los Angeles, and I always talking about opening up acai places because that's the thing. And I was saying you can put a acai place anywhere and it's going to do well. That might not be correct, but I know in the California, Florida, maybe the Southeast, I think that's true. So I think you're doing a really good business model with Everbowl. And so with that being said, are you allowing this franchise to be open to people like myself or anyone listening to this podcast?
Yeah. So again, I'm just a franchisee, but I bought the rights to a couple states. I'm born and raised in Iowa, so I'm actually helping to bring Everbowl to Iowa as a passion thing as much as anything. But then obviously the big state and the big opportunity is Texas. So, But Everbowl allows franchising in lots of different places. There's 20 some locations in the San Diego area. There's actually one opening in Beverly Hills pretty soon. All across the country, every week, there's one or two more that are opening up.
Yep.
And we're trying to bring this everywhere. I just happen to take on a couple really big territories because I built a big chain of businesses before, and my knowledge in real estate and construction is perfect for helping to scale a business like this. And we're able to create a lot of jobs and serve healthy food and bring different ingredients to different communities. And it's just kind of been one of those things where the boxes all check that make a lot of sense.
Is there a website that you can, give everybody so they can go and take a look at this franchise?
Yeah, get on everbowl.com.
Okay. And it has all the information that you need.
Yeah, it's got all the stuff regarding the food, the products, the franchise process. But yeah, I mean, so there's multiple different options, right? If people want to own their own, there's the ability to submit a franchise application and go through that process. And then also we take dollars from investors and we do them in 3-store increments. So like right now, we're just finishing the raise for 3 more stores in Dallas. And we essentially raise dollars for those and give people an equity position in them so that they can help support our growth and diversify their portfolios as well.
And that was leading me to my next question. And you kind of answered it, but if you can go a little bit more in detail, I want you to give people a little advice on, what they could do to syndicate money for deals to buy food chains. I know you said you mentioned investors, but I guess if it's not a secret, how are you finding these investors to syndicate these deals to buy more locations?
Sure. I'm fortunate to have a pretty large network. I started syndicating some of our real estate deals almost 10 years ago. And so, when you've got a proven record, when we ended up adding restaurants to the portfolio, fortunately, due to the success that we've had with other real estate, we had a lot of people that wanted to support that as well. And then through that, it's a matter of telling our story. And as we continue to open restaurants, I'm on a podcast right now. I'm posting a grand opening video, one we had last week online. We're showing people what we're doing. And then naturally, kind of people gravitate towards it, or all of a sudden they taste the food and realize what we're about to do. And so it's kind of fundraising is a never ending process of kind of telling what we're doing and showing what we're doing. And at different times, people say, hey, wait a minute, you want to talk? Hey, I've got a little bit of extra money. Hey, this. And then, once they're into our ecosystem, we just do everything that we can to win for them. And if you want to get more investors, the number one thing that you can do is win for those investors.
Exactly. Everybody likes to win. Everybody likes a return on their investment. And if you can prove that, they're going to be willing to give you more money on whether it be a real estate deal, whether it be a food chain. It doesn't matter. You know what I mean? Everybody wants to make a return on their investment. So if you get that track record of showing success, it's very easy to raise money. And I do it a lot in real estate. And I tell people all the time, if the equity is there, if there's enough of a return for this person giving you, whether it be $25,000, $50,000, $10,000, $18,000, they're going to do it because you can't get 15% on a bank account. So if that person has excess capital sitting around, they'll definitely give it to you because they're not going to get 18% or 15 or whatever you decide to give them with that money sitting in the bank.
And on top of that, investing should be fun. Like investing is so painful and we're supposed to have a few percent of our paycheck taken out and we don't get to see it until we're 60 or 70 or whatever. And, you have no idea where it's going or how it's working. But one of the things that I love so much about syndicating is essentially I'm just building a group of people that want to win together.
Correct.
And on top of that, it's tangible ways that we're investing our dollars. It's not this magic hocus pocus, whatever. And at the end of the day, let's call it what it is. When I write a check to Amazon, I have no idea what Bezos and their team's going to do with it.
Correct.
Right? You're just going in, you're now one of millions of people, and it is what it is, right? But when you buy a piece of real estate with 10 other people, let's say you buy an apartment complex together, guess what? You can drive by that building and it makes sense, right? There's all these people living in there and they're paying you rent and you're paying a mortgage and property taxes. And then there's money left over, right? Like it's very logical the way that the business makes sense. And it's the same thing with our restaurants. A lot of times, people love owning restaurants, but they don't necessarily want to operate them.
Correct.
Well, how cool is it that you can drive by a restaurant and say, I own 4% of that one and 8% of that one and 8% of this one and 6% over here. And all that, and know that every time somebody goes in there and they choose to, dine at your restaurant, that a portion of that comes back to you. And I just think that when we start looking at investing in ways of adding value and figuring out how to get that margin, allowing other people to be part of that margin and tell that story, that we really get to change the world together. We get to build more buildings. We get to provide more places people to do business. We get to open more restaurants. We can do amazing things when we all grow together, and the opportunities are truly unlimited.
I agree with that, man. And I think that what I find is that, at least in this society in the States, is like people have a hard time coming together. There's so much of a discord that's caused by many different factors we're not going to discuss right now, but we know that they're out there. And I think that's what's keeping people from connecting together and, like you said, building the world and changing the world together at the same time.
Yeah. I mean, we can do so much more together than we can separately, all fighting. And, when I started the first couple of deals that I didn't need to syndicate them, but I wanted to understand the process of having a partner and, what that structure looks like and how to do it. And I ended up becoming addicted to just kind of winning together, and we have dozens and dozens of investors, and I get to send them updates all the time. And they, but we're creating so many cool things together. I think next year we're projected to add somewhere between 150 and 200 jobs just for our restaurant stuff. I've somehow cultivated a group of amazing people that are helping me create jobs, serve healthy food, grow real estate portfolios, provide opportunities to people, and win together in a positive way. And when we're all part of these things together, it makes us all want to win more together and not have to win at somebody else's expense.
I was just going to say that I think people always want to win that home run deal. They think that one deal is going to change their life versus doing millions of deals, spreading the profit out or spreading the return out with other people, right? You can do more deals with more people with more money versus trying to, make 100,000 on one deal. Even if you make $100,000 on one deal, what are you going to do next, right? If you don't have the network or the connections because you blew them trying to hit a home run on one deal. So I like that.
Yeah, it goes both ways, right? I mean, going all in is really awesome. Early in my cell phone career, I owned all of it the entire time. Early in the career, it was amazing. Late in the career, it wasn't as fun, right? And so that's one of the reasons I just love diversification. And I preach diversification because people don't realize how close I was with that cell phone business to losing everything. I put everything into that cell phone company. And they made decisions that I had no choice over, but I had consequences from. And I would just so much rather own a fraction of all things that I'm part of rather than 100% control of them. And then also through that, I get to invest in some other people's deals and other people's businesses and other people's restaurants and see the way that they do it. And that makes me better and makes both of us better.
Man, I 100% agree. I always talk about the same thing you're saying. So it's good, man, that you're giving it from a different perspective, which is amazing. My last couple questions, because we're running up on time. This is not investment advice. We don't give investment advice on this podcast. We just, provide our opinion on what we think people could do based on what we've done. So 3 bullet points that you can recommend people do for investing or to get started.
So, the number one thing would be to make sure that you have some dollars for an emergency. There's no point in investing into something if you could be in a situation where you would have to sell that investment to fund something else, because when you sell investments, there's obviously consequences and tax things and all of that. So you want to make sure you've got your house and all your stuff around you taken care of before you go out. And then, from there, I love syndications, and I've actually had a few people that have done their first little real estate deal with me, and then that's gone and encouraged them to do some other investing. So start talking to people that that are super into investing, create a little Facebook group with them, ask questions, get around them, buy a property together, whatever it could be, but do it, go through that learning process with some other people, find a mentor or whatever it is, and you'll watch it compound a lot faster. And then the last thing, and I said it earlier, the cheat code for investing is to get your money to work early. And the more that you fight it, the more that you try and, I'll put more money in next year or the year after that or whatever. There's always going to be next year, but you have to live under your means and get money to work now. And that's what will ultimately give you the big payoff later.
100% agree. And then my last question, man, that's good advice, guys. I'm telling you, that's what everyone, the way to be successful in business, it's the same formula. It's the same thing for every single business. There's no different. You might have better employees. The talent at your office place might be better, but it's going to be the same formula regardless of what the type of business that it is. But my last question is, what 3 books do you recommend that people read to get their mind right to do what we're both doing?
It's a good question. So books for me vary kind of on different themes, but I'm gonna go with the one book right now that has been a theme not only for me in life but also in business, which is Chop Wood, Carry Water.
Yeah.
I don't know if you've heard of it, but it's a story of a guy that wants to become a samurai archer. One of the best archers in the entire world, and he goes and what does he do? He wants to pull a bow and arrow and just start shooting this target. But first, it comes down to how well do you chop wood and carry water? How well do you do the really basic things? And doing those really basic things is what ultimately creates really successful things. So, as I'm going through growing this next business and working with our teams to grow this next business, a lot of it is just chop wood, carry water. Every single time that a customer walks in the store, let's give them a remarkable experience, right? When they order online, let's make sure that their order is correct. Let's make sure that they've got a spoon and a napkin and a menu in there. We staple their bag shut so that when they're handed that meal, they have a smile on their face and they know that nobody else has touched their food and they're good. And when we do those little things, when we smile, when we compliment, and it goes that way in different things, when we're finding properties, when we prospect, when we get on that phone, when we go to the MLS, when we go onto the sites, every little thing that we do is simply chop wood, carry water. And then through that, we turn into really great masters at our crafts.
I like it, man. I like it. Well, if anybody wants to reach out to you to have a conversation or even invest in some deals that you have, what's the best way for them to reach you?
Either Instagram or LinkedIn. I'm pretty active on both of those, or our website, sloan-capital.com. There's a contact form right on there, and we'll have somebody from our team reach out.
Well, guys, he gave you a lot of good information. You hear it from me. You hear from a lot of people that we bring on the show. So take it and listen to it and put it into action ASAP. Like he says, you put your money to work right away. But Justin has a lot of good stuff going on, man. So I advise you guys to reach out to him. He's obviously very knowledgeable about a bunch of different things. So if you're on LinkedIn or any of these social networks, I'm pretty sure he won't mind reaching out to you because he's obviously trying to look out and build things together and change the world together. So guys, thank you for tuning in to this episode. We'll see you guys on the next one. Take care.
Aren't you ready to start a business or grow your real estate investing portfolio? If you answered yes, allow Andre and the expert advisors at the Residual Roads Business Institute to fast track and put you on a path to full-time investing. The greatest transfer of wealth in our lifetime is occurring over the next few years, and you can take advantage if you know what to look for. In order to be successful at real estate investing, you need to learn how to leverage your current resources to generate quick money, big money, and retirement money. Let Residual Roads advisors craft a plan to get you through these phases using little or no money in 6 months or less. Don't wait for a job. Create one for yourself and others. Go to residualroads.com for mentorship, and for our free course, go to residualroads.thinkific.com.